like myself, your team, Italy, lost last night, which is pretty sad. But anyway, looking at the Kenyan market, we do have the central bank in focus this week, with them having to decide on interest rates, with the probability of an interest rate cut being more this time.
Yeah, well, we saw the central bank coming into the market last week mopping up liquidity. So I see two things. I see that there's a good chance that the CBR, MPC will choose to reduce the CBR by a couple of maybe 25 or 50 basis points, but probably will not have any real change in monetary policy, in the sense that they will still try to keep the market, the liquidity in the market tight, so that again they can work on inflation and try to reduce it down to. Right now it came in at 10%, but hopefully they want to maintain the policy to bring it down lower.
Looking at that inflation rate coming in at 10.05% in June from 12.22%, single-digit levels, when can we start seeing those? It seems like even next month we could be reaching levels of single digits.
Yeah, it's a good possibility. It's a significant possibility. Two reasons: base effect and worldwide recession bringing fuel prices down, so that will have a positive effect on local prices. And of course, the tightness in liquidity as well, keeping consumption, borrowing at low levels, so that it can curb demand. So on those three fronts, I think inflation will stay low, or even come down low.
Now, looking at the central bank's intervention into the buying up liquidity, helping to shore up the shilling, that has helped over the past couple of months. But traders are saying that should an interest rate cut come through, we could see pressure coming through for the shilling. Your thoughts on where the shilling could perhaps go if the central bank cut rates?
Like I said earlier on, if the central bank cuts the rates, it doesn't necessarily mean, because the CBR is not what is available in the market. If you look at the market, T-bills had been going at 11%, I mean down to a low of 10%, although we've been seeing upward pressure coming through to say 11%, with even very low participation. So we could see interest rates rise further and entice investments from foreigners, which is what is holding up the shilling. Now, the interesting thing is that the inflation rate coming down lower really expands the real earning rates. So those two effects of available high interest rates and the lowering of inflation rates, we'll see now foreign investors who are showing up shilling through the capital accounts maintain the investments, or probably even increase it. So I'm not too worried about a rate cut reducing focus on the Kenyan economy, because I think that the real thing to focus on is what available rates are there in the market, and the real rates at that.
Let's look at some of the companies that have come out with results. We had Williamson's tea reporting results last week. They issued a final dividend of 7 shillings and 50 cents. Your thoughts on the results?
Well, we had to crunch the numbers. The numbers for us came early this morning. But from so far, for what we see, operating profits grew, of course, for Williamson Tea. But our concern really is valuation of biological assets. Because they report two companies, both Capchoro and Williamson Tea, and one had a real boost in terms of biological asset valuations coming through to the P&L, and the other one saw a significant reduction. So we really don't know what to read into that as of yet. I think that is a subject for further investigation. But for us, what is positive is that they're announcing good operating profits so far. Of course, we still got an eye out on foreign market prices. That's going to be an issue in the sense that the global economy right now is undergoing through some challenging times, and obviously we're seeing commodity prices coming down as a result of anticipation of weak demand going forward. Nevertheless, we trust in the companies, because we know Kenyan companies produce quality tea. So hopefully there'll be that price differentiation going forward.
Now looking at Eveready East Africa has appointed a new director. Your thoughts on this new appointment?
Yes, the lady used to be one of our directors as well, so we know her well. So we think that Eveready has been going through some tough times in recent times, but they have a turnaround. They have a turnaround program in mind, on the basis of which they're trying to enrich their senior management to be able to deliver that. And it's quite telling, because the lady coming in, Ms. Catherine Gahu, is really her area of focus or expertise is in marketing. So and we've been thinking that perhaps Eveready needs to reposition itself in the market so it can take advantage of the available opportunities in its space. And Ms. Ngahu coming in perhaps is one step towards that, and hopefully better times to come for the company.
Now it's the start of a new week. Which stocks will you be looking out for, and what kind of trade can we expect to come through for the first week of July?
Given the inflation numbers again, we expect required rates of return to drop a bit for investors, so that should help see valuations get lifted in the market. So generally we expect July to be another positive month. Right now, for me, I think the low-hanging fruits include the two members of the insurance group. We're looking at CFC Insurance and British American Insurance, the latter being very liquid, but both of them are trading close to net asset value, and we think there's some upside on those two stocks.
Well, that's where we have to leave it. Thank you so much for joining us, Johnson.